What's up, everybody, and thank you for tuning into today's Trading Rebellion. Obviously, you know the crew. They've been running this show well without me for a long time. Nick Mancini from Trade the Chain and CJ Monty from MarketRebellion.com. Big day today. It's Monday. I'm glad to be back with these guys. I'm glad they're having me as a guest. I think is the point we're at this stage. But we got some big news, and we're going to be covering it all with you on the crypto front, as well as we're going to be covering some of the TradFi stuff as well. I know CJ and Nick have some overviews. I don't know if CJ brought any commodities to the table today, but I got to tell you, the last couple of weeks, CJ, there's been some opportunities, and we've been mentioning them on the Twitter Spaces, but
what kind of opportunities in commodities have you been talking about?
You know, if you haven't been listening, I'm not going to divulge it.
The guest who comes and leads the show. Come on here. Was it oil? Was it gold? Dollar? What do you guys trade?
No, it was ag. No.
Softs?
Yeah. Well, you're not making money. You're not making money in pork bellies these days.
You know, yeah, that one. Lean hogs, an incredible week. I missed it. There were others, but I did see that one, no doubt. Anyways, enough of that stuff. Alex, continue, my friend.
Let's first. I'm going to take everybody to what the bloodbath looks like in the markets today. Here we go. We're down to 1.09 trillion, down 5% in total market cap in crypto. Huge decline from yesterday. Obviously, on the news of CZ and Binance US being sued by the SEC, which came out this morning. It wasn't a shocker. It wasn't completely unexpected, but you're just never ready for the day that it does break. Bitcoin falling from 27,000 just yesterday to 25,694 today, over 5%. Ethereum falling 4% to 1812. But let me show you what. Hold on one sec. I've been speaking about low volume for the last 2 months. Here, 44% uptick in volume on Bitcoin, 19.4 billion traded. If I go back to the overall market, 44 billion traded in the last 24 hours. That of just about this time yesterday was 19 billion. So a huge pop. Same with Ethereum here, 8.45 billion, 40% pop on that one. But look at there you go. You got that big decline in the market. It's across the board. So maybe a lot of opportunities, but I know Monty's been printing some money with a couple of it on the short side. So I don't know. We'll see. CJ, he's the perma bear sometimes. I'm curious to see what he has to say about the market. He also has a new look, if you guys don't notice, and a new background. I haven't been on the show in a while, but the background changed. You're sitting up against a different wall. Nick, take us into the macro overview. Let us see what's happening there and how equities are being affected today. I know they're not being affected by the crypto news.
Yeah, so when we're talking about the macro, of course, have to mention the Binance news today. Let me pull up. Let's just look at equities to start here in comparison to what we talked about with the TTC community. The 4,300 level is definitely that kind of a local price cap. We said if it gets above 4,300, you've got room all the way up to 4,320, and a rejection would likely send you back down to supports near 4,260. So we're getting that down leg. We'll see how that affects it. Absent the CZ news, which I think is probably the all-encompassing news for crypto. When it comes to, let's separate TradeFi and crypto right now, because crypto is probably going to run on its own stream, at least for the next couple of days, potentially into the end of the week. So when we're talking about equities, and is my stream okay?
Yeah, we're all sitting here listening.
Okay, sorry, I was choppy on my end, so apologies about that. So when we separate equities and crypto, I think crypto is going to run its own stream, going into this week, so we can kind of rip away equities and crypto correlation due to the big news that we got today. But when we talk about equities, we have a Fed blackout week, and Fed blackout weeks have historically been a little bearish as they typically come the week before FOMC. Nearly every FOMC has resulted in an interest rate hike, but this FOMC that is coming up, I believe next Wednesday on the 14th, is expected to be more likely than not an interest rate pause, which may breed some interesting volatility on the charts. We've had nothing but rate hikes for pretty much more than a year. So will a pause lift us higher? We obviously do not know that, but Fed blackout weeks have typically not been anticipated in a bullish fashion. The most interesting part about next week, I think, is we have CPI and PPI printing before FOMC. So it'll be a very interesting week next week, but absent any data, debt ceiling news is behind us. FOMC is now at the forefront. I would expect a very choppy and flat week for equities unless we get some earth-shattering news in relation to a rate hike, inflation, or unemployment. And remember, we got higher unemployment data last week. So that is pointing in the direction of a Fed pause. If inflation data continues to decline month over month, that may also support a Fed hike pause next week. Talking about crypto, we obviously have the CZ Binance issue. The SEC has lobbed 13 charges against Binance for operating a unregulated securities exchange, commingling funds. Are some of the other ones. They named several cryptocurrencies. I think Solana, ADA, Matic was on there. Even Matic ended up in the lawsuit. I think a Sandeep tweet, who is the CEO of Matic, was mentioned in the 130-page lawsuit by the SEC. So everybody is kind of getting their takes out right now. This is BS. This is legit. I don't believe this. The SEC is overstepping here. So we're going to have to wait to see how all of this fleshes out. But again, we've kind of talked about this line of conversation a lot. The XRP litigation has been going on for, I think, 3 to 4 years now. I would not expect Binance to roll over easily. They've also got the CFTC lawsuit going on. So the Binance definitely has a lot stacked up against it. And that's why we're seeing, obviously, short-term downside price action in crypto. We'll have to see. We'll talk a little bit more about exact price action, but I don't think anybody can say we're going to go up or down further after this news. It's going to take several days of digestion for us to really make sense of what's happening in terms of price action. You're on mute, Alex.
I knew that. Listen, I just dropped a link into the chat, which is a good TLDR on the different individual complaints against Binance from the SEC lawsuit filing. To help break it down, it's 136 pages long, and I wouldn't suggest anybody taking the time to read all of that at once. I just saw Charles Hodgkinson pretty much say the same thing when he took a look at it.
Can you pull up the yeah, this is what I was about to ask you to pull
Let's
up.
talk about this.
Yes, this is honestly shocking. First of all, the fact that the SEC even has a Twitter is like weird. You're a government agency. Do your work at a desk and don't tweet on social media. But look what this quote says. We are operating as a fucking unlicensed security exchange in the USA, bro. They posted this on their Twitter. They made this public. They are taking a blunt approach to what should be a much more nuanced approach. It's this is unbelievable. And when I see this, I immediately think, oh my gosh, altcoins are in trouble. I don't see any bullish case for alts as long as you have this sort of rhetoric coming out from the SEC. And I mean, this is not just your everyday bearish rhetoric. This is beyond that. This is seems like they're really coming after Binance hard here. And as a result, I think this is going to have some long lasting implications on the space. At first, it was just affecting Binance coin in particular. It was down almost 13%. That was also on the back of the news that CZ will be stepping down as CEO. But the fact of the matter is, now if you look at a lot of the alts, I mean, pretty much everything is massively red in the last hour. And I think a lot of it has to do with that SEC tweet and kind of the fact that this tells us that they're not going to take a nuanced approach to regulation. They are going to hit us over the head with a baseball bat, and that's going to be, how they regulate this market. So
Yeah.
this was concerning to me, but also at the same time, I was short uni and sushi like we talked about on Thursday. So, rode those down for a nice
look
tight
at that!
profit.
Look at that sushi chart right there on Didex. That's a short dream right there.
Well, also speaking of Didex, one of the few tokens up on the market today, likely because of Binance, potentially ceding market share, which is also funny because Binance is not available to trade in the US. Neither is Didex. And nobody trades on Binance US anyway. So it's, that is an interesting part about the narrative, is that a non-US exchange is up on the day when also a non-US exchange is being sued, but doesn't have to cease operations or business and already doesn't serve the US market. So that one we'll talk about later, but I thought that was absolutely fascinating once you unpack all of the details. So,
well, I mean, let's go back to the markets, and there's a lot that look at these 24-hour changes: 9%, 7%, 8%. This is just the top 10 right here. Let's talk about the impact that the markets are going to face right now with the SEC. We have two of the largest exchanges, Coinbase and Binance, now embroiled in lawsuits. If you can say with a straight face there's not a war on crypto in the US, I mean, I don't want to be anybody. I don't want to be your friend. I don't see how you can say that at this point in time, particularly with what happened during the regional bank crisis. What's happening now? There's no let up. I mean, putting red tweets out with quotes saying stuff like that in that kind of language. I know it's a quote from somebody, but it's a taunt. I mean, just when we thought we were thawing and we were going to maybe end the year on a high note, I don't see this happening in the short term now. I don't see how you do not make money shorting the crypto market.
Yeah, completely agree with you, Alex. I mean, this is like the SEC clearly announcing a full-on war on crypto. And if that's the case, like, you don't want to fight the SEC. Just like you don't want to fight the Fed, you definitely don't want to fight the SEC. And I think a lot of these crypto assets that are, we're already looking precarious from a technical perspective, and had been beaten down so badly because all of their avenues of exposure had been taken away, especially here in the West. Like, if you want to buy crypto, like, where do you even do it anymore? Where do you feel safe doing it anymore? It's like there's really no on-ramps. So shorting alts, I feel like, is really the only thing you can do in this market. But I do think it will be very profitable because not only is, this kind of like a stranglehold that the SEC is clearly planning on putting on, U.S. based crypto exchanges and thus U.S. customers' ability to trade altcoins, but also, a lot of these alts already looked technically weak relative to Bitcoin. So I think the alts fall hard. Bitcoin's already falling hard. I think Bitcoin will be the kind of safest play to kind of answer Sleepy Puppy's crypto. But
I wanted to get to that next. I wanted to talk about where are some of these options for flight to safety. And I want everybody to chime in. CJ, if you tell me corn futures, that's fine.
I just think it's quite bleak. Like, it's probably worse than 2018 and 2019 in that bear cycle because we really didn't have the looming threat of regulatory, threats and stress. We still had easy money. We still had lots of QE that was coming. We may look back at days like today as like, the end of kind of the 10-year crypto cycle where every 3 years, everybody just assumes we're going up 1,000,000%. And if there's going to be purposely malicious, regulation put forth, it's going to inhibit that, as well as the fact that the stock market's still very vulnerable, despite our recent, massive run in major stocks, which we'll talk about. But there's going to be vulnerabilities, in my opinion, late in the year. And that's probably still going to affect crypto if it affects equities as well. I mean, look at the Nikkei, look at, Kospi, look at NASDAQ. They're all up massively. And crypto, even before this regulatory uncertainty, couldn't get a bid. It's just not an interesting market right now, at least. Just wait for it to come back. But it's not.
To echo both CJ and Monty, the one positive I will note is yet again, and yet another lawsuit, Bitcoin and Ethereum are not mentioned as securities. So small win. We'll take what wins we can get. But Gensler is yet again not attacking Bitcoin or Ethereum as being unable to trade based on securities laws in the United States. So if you're thinking about a flight to safety, well, what are the two opportunities that you have that are relatively safe or clean in the eyes of the regulators who are continually raining our parade? And I use raining lightly because it feels like a hail of bullets recently. So if you're thinking about a flight to safety, then I would consider that Bitcoin and Ethereum likely move in a stronger, what's the best way to say it? They likely don't go down as hard as the alts do, if everything is to go down in reference to what Monty was saying. So not saying that Bitcoin and Ethereum are going to go up, but if you're talking about flight to safety and you don't want to sit in predominantly cash in case good news does come, then you're predominantly thinking about Bitcoin and Ethereum, which are not as down as most of the assets today. I guess possibly we could talk about exchange tokens as well. I saw Gate token was up surprisingly. Didex was up surprisingly. MEXC token wasn't down that hard. Now, I'm not saying buy random exchange tokens or anything like that. But, if you're thinking about short-term plays for relative strength, then you have to look at what is currently, strong in the face of pretty bad news. So not saying go and buy Didex or MEXC, Bitcoin or Ethereum, but if you're looking to suffer the least in the short term, those would be what I would be looking at right now.
Well, I'd like to just interject with something here as well. Speaking of the problems we're facing in the U.S. with regulatory agencies, I happened to be on a Zoom call yesterday here with Robert F. Kennedy Jr. and a couple of other people, and we got to ask questions. And he spoke at Bitcoin 2023 last month, and was, spoke very favorably to Bitcoin and to being anti-CBDC. Now, when it comes to this narrative, one of the questions that I have for him is, listen, we got Fed now coming out in a month. We have regulatory by enforcement that's in full force. And I understand you're winning the attention of me and a lot of other people by saying you're pro-Bitcoin, anti-CBDC. But are we too late, gentlemen? I mean, are we? Can this be corrected, or are we going to go through a phase where Bitcoin is dead in the U.S., where innovation in blockchain is dead in the U.S. when it comes to cryptocurrencies? This is going to take a while.
I'm pulling up a chart you might think is interesting, Alex, but I'm interested to hear others' opinions first.
We'll wait for the chart, sir.
Could be like 30 seconds.
All right. So anybody else want to chime in on how badly hurt we are, and if this is going to be a lasting thing? Granted, we get a new president. The likelihood of Gary Gensler, the poser, staying in office is low, but is the damage done?
Yeah, so I've been saying this for a while. If we have another Joe Biden or, let's say typical Democrat in power for another 4 years after, 2024, crypto will be choked out in the US. There's pretty much no getting around that. If you think their tune is going to change from today to 4 years from now, you're sorely mistaken. And so the only real hope is a much more moderate Democrat, such as Robert F. Kennedy, or someone like Trump, who has a literal NFT collection, which is not doing poorly. It seems
I forgot about
one of the
that.
better performers, shockingly. So there's only really two candidates, and I don't really trust DeSantis at all. He's very much a wolf in sheep's clothing, in my opinion. And that doesn't mean I'm a Trump or Kennedy fan. I'm just putting it bluntly in terms of pro-crypto versus anti-crypto. Trump or Kennedy, crypto has a life in the United States. Gensler's gone. It takes a little bit of shift politically and in terms of people in power, regulatory power, et cetera. Then, I think we have a very good, bull market, and Republicans are very much known for trying to open things up and decreasing regulation, which typically breeds financial success, at least in the short term. So I'm very much a believer that choke point 2.0 will turn into full choke point 1984 post 2024, provided the current administration stays in office. So I think anybody who's kind of arguing against that is not really reading the tea leaves, because all Democrats need is a House and a Senate and a presidency that is under their control, which is generally very likely to happen for a winning presidency, at least, after the initial election. Typically you'll see, the sides align, and then through the midterm elections, the sides shift. So if Biden gets a House, a Senate, and his own office, they're passing through legislation that pretty much ruins our industry and promotes CBDCs and ultimate financial transparency, which sounds bad. But, if you're just a regular citizen and you do everything correctly, if the government can then poke into every single thing you do from, the moment you wake up to the moment you go to bed, there is no privacy anymore. There is no sense of, one's self-worth. You're packaged into everybody else's bullshit, whether you like it or not. And you can have ESG policies definitely put on top of you if you're spending too much gas, if you're, maybe made a racist remark. Anything that you do will impact you financially in a CBDC system. And although everyone will say, well, if you're not doing anything wrong, you have nothing to fear. Well, there's been plenty of times in the United States history where people who have done nothing wrong have had plenty to fear, because the government can do whatever the hell they want at any point in time and not respect your freedom. So if you think that this isn't going to turn into, a kind of a 1984 CBDC, we're going to see all of your bank accounts, all of your activities, all of your movements every single day of every single week. I don't think you're reading what is happening around the world. Just because we're a democracy does not mean we're going to take
I don't think we're that far off now. I think you need to walk around this day and age with the assumption that you have no privacy, even though people, may tell you that they do. And I think when it comes to bank account or financial information, I think that there's more that can be accessed by centralized government than we think. Crap, I hear all the time. I read stories about how the FBI and CIA have left wiretaps active after they forgot them on a case. What the heck? But CJ, I'm going to pull up this chart. Talk to us on what's going on here.
Look, don't take this 100% seriously. Take it with a grain of salt. I just wanted to illustrate how early technologies can go through these boom and bust cycles. This is something that we talked about in terms, I think, Thursday. And, it doesn't look like much on this chart, but if you compare, early 1920s there, 1924, 25, right as the bull market was beginning, we did have a small bubble similar to 2017 in Bitcoin. And then, of course, the real bubble came, but we didn't do really anything for decades after the fact, even though radio was a very crucially important technology. Same thing with oil, the first boom and bust cycle. It was crazy. You'd have these pioneer people who bought this land super cheaply. Then they went through these massive boom and bust cycles, went from rags to riches to rags. And then oil didn't recover for another 20 years until new use cases were discovered. And the same thing was with radio as well. So it's
I don't have 20 years.
try to get what?
I don't have 20 years, man.
That's my point. It's like, and the forces that be, like, we actually wanted radio, right? Like Monty was talking about all of the military use cases that we needed it for. These were things that were encouraged in the capitalist economy, when what we're seeing now with crypto. And I always like to say that, markets are more powerful than politicians, but in this case, they're not really doing us any favors.
Agreed.
Yeah, and doesn't it feel like this was always kind of an inevitability? We have Bitcoin, which is this uncontrollable asset, or whatever you want to call it. And then you have the US government, which values, the US is all about innovation, right? We've wanted to be on the front lines of innovation for the last century. That's been like what we've been all about, is capitalism and innovation. But also at the same time, the government wants to still, control everything, and they can't control Bitcoin, but what they can control is the exchanges that sell us the Bitcoin. But what they're doing is, with this approach they're taking, is they're forcing all the innovation offshore. So it doesn't make sense to me, where it seems like, to me, they're prioritizing the control factor over the innovation factor. And that's concerning to me, in like a short-term perspective, that they're willing to sacrifice the innovation and all the possible capital that comes along with that innovation, or even military applications of that innovation down the road. They're pushing that all offshore without giving it much thought. That's what it feels like to me. And that's concerning, because, we want to be on the forefront of innovation.
Yeah.
I was watching a video the other day where, during the Cold War, we spent over like $20 million paying this spy for information, which today would be worth like, something like $400 million. That they literally paid this guy just for information to stay ahead of the Russians. Well, now we're pushing the innovation all overseas. None of it's going to be happening here. So what is there going to be left to control? Nothing, except for perhaps this CBDC that they create. So I don't know. It just seems it's discouraging for me. I was hoping they would choose innovation over control, but it seems like they care more about controlling and prying into our lives than they do about allowing innovation and capitalism to flourish here, rather than abroad. So,
Alex,
yep.
Oh, go ahead.
Go ahead.
Well, I was going to mention that Alex made a point to this during one of the B3 shows, where you kind of mentioned, I think it was maybe a week or 2 weeks ago, but mentioned the fact that Gensler was supposed to be our knight in shining armor. He was the MIT guy. He was teaching the Bitcoin courses. The whole industry was Gensler. We've got this expert in charge, and whether or not, the orders are coming from his handlers or himself, being the controller here, we got played. And that's why, and Alex mentioned this in context of kind of DeSantis being pro Bitcoin. Well, we kind of heard that similar from Biden. And like I said before, although Bitcoin and Ethereum are not really mentioned as securities in the context of all these lawsuits, I have to imagine, there's a step-by-step basis to all this. Win a couple of cases, then you attack the big boys using the precedent from below. So there's a grander plan here. And I will apologize for, kind of the doom and gloom that I portrayed, earlier a couple minutes ago. But I think anybody who's not worried about, the U.S. being a slow-moving democracy, and autocracies and communistic countries such as China and Russia moving at really the speed of light to integrate citizens into this master system of control, I think we will lose market share and ability to control and impact the globe as we have been over the past 100 years if we do not adopt, some pseudo autocratic methodologies to control and monitor our citizens. So, we're talking about AI potentially blowing up the earth, and nobody's concerned about the government, kind of walking into your house year over year more so. And I think, we've kind of got the wrong conversation going on here.
Well, on that note, and I want to segue since we're on the not the doom and gloom note, but Nick is right in a lot of points he makes. But the innovation side, I want to jump over to what's happening right now, which is the Apple Developer Conference that's going on, and they actually just announced a short while ago their latest product since 2014, according to CNBC, the Vision Pro. And if you look down the list here, you could see 8 different new products that they've announced here at the developers conference. Monty, tell us what's going on.
Yeah, this is actually big news because it really is the first product they've released since 2014 that isn't an iPhone. And like, I was actually talking about this with CJ not too long ago, but like, if you really think about it, the world hasn't changed that much from a technological standpoint in the last 10 years. Like, they just switched from the bezeled sides to the rounded sides, back to the bezeled sides. The camera gets a little bit better. Great. Okay, that's awesome. But this is something different, right? There's taking a step into the metaverse realm. And that I think is important for a few reasons. One, it validates the business model of companies like Meta that made this transition a while ago, but also it speaks to the fact that although right now I think VR is still very like, I have an Oculus Rift, it's still very like gimmicky and not like, in terms of everyday commercial use cases, it's very gimmicky. And we're going back to like that radio chart, you could almost make the same comparison, because right now it's so speculative and you can use it to play games. CJ and I have played them. They're a lot of fun. The VR games, like, they're fun for an hour, and then
you get kind of tired playing them. Like, there was this one where you would have to defend a castle and you'd shoot arrows. And after you do that for like 20 minutes, your arms get really sore.
So it's a good exercise.
Really fun game, though. I mean, fun game. Yeah, that was like years ago.
Yeah. That was, if you think about that was like 10 years ago. And now, I mean, the games are even better and stuff. But this is a big step forward for Apple, in my opinion. And like you said, it wasn't just this. They also announced some other innovations as well. One thing that I think is particularly interesting with this is going to be how they follow up with this Vision Pro headset. Because the headset itself is just like, it's just the object. The metaverse is what the product is going to be, right? So like, yes, they'll be selling you the headset, but they need to build an actual metaverse. And like you said, Alex, like, they have a incredible amount of data. They can build a pretty awesome metaverse tailored to the specific user, which is something that I could think of.
Scary and cool at the same time.
Yeah, right. Scary and cool. Very Ex Machina like, and very sci-fi like. But this is the day and age we're living in, and I am curious to see where this goes for Apple. Another thing they announced was the ability to sign documents with just the click of your mouse on any iOS or Mac device. So after I heard that, I went on and I instantly shorted DocuSign. I think that kind of kills their business model.
What about got earnings on Thursday?
Yeah, well,
they got earnings.
Let's talk about opportunities from these observation folks. Let's give the people a little bit of alpha.
Okay, yeah, here's some alpha for you. This is what I think. So they announced that there's going to be this new update on your iPhone. Next time you update your iPhone, next time you update your Mac. If you get an email that requires a signature, or any document that requires a signature, rather than having to use DocuSign or Adobe, you'll be able to do it directly from your Mac, importing your signature. And with just the click of a button, you'll be able to sign a document and send it on its way. That's DocuSign's entire business model. and they charge you $30 a month for it. So that to me is the death of their business. I don't see how they recover from this. I don't see, even though, still PCs are, you'll find PCs in the majority of like businesses and like enterprise facing companies. I still think this is the beginning of the end for a company like DocuSign. And it's only a matter of time until Microsoft does the same thing, right? So eventually they'll have that same technology and DocuSign will be, a thing in the past. So right now, I think this is the time to be shorting it. I went ahead and bought some puts in DocuSign. I think it will continue to fall in the next couple of days to weeks. Even if it has positive earnings, watch for that. If it has positive earnings on the top and bottom line and opens down, that's a failure that we've seen in other assets. That's been a precursor to highly negative price action. So that's what I'd look for. Earnings on Thursday. If they beat and open down, that's DocuSign. I'm going to add more to the shorts, but I already am short, full disclosure. Bought some puts this morning.
All right.
The disclosure.
The metaverse days are heating up. I think this is actually pretty fascinating from a business perspective. Just to break it down from like business model, Apple's last product was the release was 10 years ago. Was the Apple Watch. It took a little bit to kick off, but I believe the Apple Watch created another like 20 to 40 billion dollars of revenue for them. So Meta was the first person or first company to release a metaverse product, which was generally, accepted by the industry, but, kind of made fun of for being a little bit, old school and not having the right games or whatever. So now Apple has another product that they can sell you every single year that will come with an entire gaming library. So think of kind of a Roblox situation where people are developing specifically for Apple products. Apple's taking a cut of all of the game revenue share that's going on. Plus, they're getting all the user data and statistics, as Monty and CJ mentioned. So, if you're just thinking about, what can Apple do to sell a new product that isn't taking market share away from their current products, that will generate revenue every single year for them, that people habitually buy, whether it comes with, VR1, VR2, VR20, we will buy it. These Apple heads, I'm one of them, every single year. So I think this is a pretty genius play. I do think DocuSign is a great idea, but with the metaverse wars heating up, I think any move in Apple related to a metaverse play probably going to translate a little bit with Facebook and Meta, and vice versa as well. So if you're kind of thinking about, if Apple is making this play, how's Meta going to combat that? Well, they're both going to have similar plays, and I think both plays will impact price action similarly.
All right. Well, I got, let's see here. There's one thing I want to, are you guys all Apple guys? Do you guys use Apple laptops, desktop, whatever, phones, all that good stuff? For
the most part.
Phone.
You Apple across the board. For instance, I use, what do I have? An HP laptop, but I have an iPhone.
Yeah, I have watch, phone, and MacBook.
Yeah, okay. Same. I got the watch, the phone, MacBook, and I use those for work. But then I have all here is like a PC, so I have both. But the thing about Apple is they're very good at roping you in. Once you get one of their products,
the interconnectivity, right?
Yeah, they have great interconnectivity, and I even notice it when I'm wearing like a different watch, not wearing my Apple Watch. Like I feel like I'm like naked or something, and I'm like missing like out on everything, and I have this like weird FOMO.
Well, you can copy stuff from your phone to your laptop, and then if you have multiple laptops, like I have a 2017 MacBook where the screen's dead, but the device still works, so I sync that up to a desktop. Then I have my other MacBook synced up to 2 desktops, and the MacBooks talk to each other, so I can copy paste documents. I can move my mouse and open up completely separate worlds that don't impact each other, but I can still, one mouse is connected to all screens. So it's actually, if you are a Mac head, and you have setups like I do, you can basically go from your watch to your phone to computer, and vice versa, depending on whatever information you need to access, which is actually very useful if you're a technologist.
Well, let me ask you guys about this then. Let's see. They unveiled a $7,000 Mac Pro with M2 Ultra, which I assume is the new chip, and it says it right there, replacing Intel's chip. Its highest end desktop computer. Now, guys, is this something? Are you going to be buying a $7,000 computer right now? I mean, I don't. I have a full blown gaming system hooked up because of what we do for business, not because I play video games. And all this. I think my setup is
right.
You're not on. I've seen you on World of Warcraft plenty of times, Alex.
No, you have not. I do have a stream account, but or Steam account. See, I'm not even. I'm getting too old for this.
Those products that you mentioned, like the $7,000 Mac, that's what you need if you're at like Pixar and you're creating like feature length movies. That's the kind of technology that you have to run very high rendering. I would assume kind of the AI technologists are probably going to dive into that stuff as well, because it's so high powered. The memory is insane. And it's going to be able to run whatever, multiples of programs that you need to do really powerful work. But unless Monty's running an exchange from his apartment, I don't think he needs a $7,000 Mac Pro. So
listen, I'm sure it's going to be a great computer, but is it going to be better than $7,000 worth of like a pre-built, like a PC that I could build myself with like 2 NVIDIA graphics cards and an Intel i9 processor that's water cooled? I don't know. I don't think so. I mean, yeah, it's a nice big screen and it looks great and it's clean and it's sleek and it's Apple, but is it more powerful than a $7,000 PC? Probably not. No,
it's not. God, enough with the fundamentals. It's like we're going in Target aisle by aisle saying, "Oh, they're gonna do like." If the Qs crash in Q3, nothing matters about this for Apple. It's going to go down.
All right,
it's exciting for one day, but like, let's move on.
Wait, I got one more. Okay, man. I like going aisle for aisle sometimes.
There's a startup with $100 million in funding right now who just bought 1,000 of those computers. Trust me.
All right. FaceTime for Apple TV. Is this a competitor to any current remote working products? Is this this is one of their great updates today. Seems a little pointless.
It's going to revolutionize the OnlyFans business model.
All right, let's move on.
It's Alex. It's for video conferencing. So I don't know if you've walked into a bank in the past 5 years and tried to do a video conference, but it's fucking impossible. And apologies for my language, but I had to deal with this plenty of times in my time.
Your video? What do you? Whoa! Step back. You're video conferencing in banks?
Yeah. So if you're a Fortune 500 company and you're video conferencing, you're probably doing it through some very old mid 2010s technology that's not very compatible or easy to use. Like when I was at Deutsche Bank, not 6 years ago, it was nearly impossible to call people at different locations because of the difficulties to actually video conference. And if you're thinking about all the new builds and new office construction, most of the new offices, like startups, accelerators, innovation departments and stuff like that, typically come with a full Apple setup. They have all the computers, they have Apple TV, et cetera, et cetera. So if you're thinking easy video conferencing, you don't need Cisco anymore. You don't need this other company. If you buy everything in bulk, from your laptops to your hardware to your video conferencing, you can get all that from Apple. So talking about companies that will take market share away, Zoom has no hardware, whatever. They're not going to be compatible with this. Cisco is not going to be compatible with this. And anybody who's building new offices and with this kind of technology focus is going to want the brightest and the best. And that comes with brand recognition, which is Apple. So I think this, speaking of DocSend getting shorted, anyone who's in video conferencing software, you should probably look at as well.
DocuSign.
DocuSign, I
DocuSign,
apologize.
two different companies. I don't want
Good
you to
point.
flood Docs.
At what
DocSend.
At what point does Apple get hit with a lawsuit for being a monopoly?
Antitrust?
Yeah, like this, like an antitrust lawsuit seems to be something that is. I mean,
Yeah,
I
but
think I
it's-
They're turning into a bank now too. So
yeah, I mean, they're doing that. I mean, think about all the horizontal integration that's occurring within like the tech space right now. Like you just pointed out, Nick, like Apple is basically taking over everything. And I think that's where it's unfortunate, but I think that's where the alpha's at, is shorting companies that try and
Compete
go
with
against
Apple?
Yeah.
I'm
If you're
shorting Apple after listening to this 20-minute discussion about how great their products are. Like, dude, none of this matters to the actual.
What are you talking about? None of this matters. How does the
well, he's right.
I'm
In
not talking
terms
about
of
how
market
great Apple
impact,
is.
it's already happened. So we're just kind of talking about downstream.
I don't even like Apple products. I hate them. Okay. I hate them. But their business is taking over, like they are taking over other businesses, and they're stealing market share away from other companies. Like, why does Zoom need to exist when
CJ's a Microsoft guy. That's why he's upset.
CJ, hold on before CJ. We're going into a special segment today. It's called the CJ segment, and that's where he gets to talk about anything he wants to talk about.
That's dangerous.
As this show goes more Joe Rogan-esque by the minute. CJ, what would you like to speak about, sir? I see you have something teed up.
I mean, do we want to talk about opportunities or?
Yes, this show is about making money.
Yeah, I don't know. I don't like Tesla or like some of the big tech here, especially as NVIDIA kind of closes down. So yeah, not a whole lot. I'll pass back to you guys.
I mean, honestly, the euphoric sentiment in relation to us, talking about how cool Apple products are does, I mean, understandably from CJ's point of view, probably short after this after this show. It's buy the rumor, sell the news. The Qs are up, SPY's up. We're seeing a little bit of a pullback today. So maybe kind of bringing CJ in, because he's really the master of the TradeFi charts when it comes to this show. Yeah, I think it's actually a really good kind of segue in terms of conversation. So today is definitely a sell the news event. Apple's obviously ran up to the developer conference. Anything that they were going to announce was generally rumored or kind of understood to be announced today. They already reported earnings. So all the good news is really behind us for Apple. And now we're looking to the next set of earnings in terms of when they're going to release the products, what they expect, revenue to be, and all that fun stuff. So from my standpoint, kind of just thinking with CJ's hat on here, it does seem like a decent opportunity to really start thinking about equities shorts, because I feel like a lot of the euphoria and good news is really behind us. And now we're on this stage of, okay, is the Fed going to, flatten interest rates? How long is it going to take them to pull back interest rates? We've got kind of new treasury bills being issued, which people are talking about as potentially a form of QE. So there's I feel like there's a lot of stuff on one side where it's like we should start shorting now. And then on the other side, well, it's like, they're releasing, I think, how many billions of treasury bills into the market. And so, there's
a lot that nobody's going to buy except for us buying them back.
Exactly. So I don't know. I mean, like, just the fact that we're, talking on Apple for 20 minutes on a segment today does kind of make me think, hey, if I was watching this show, I'd probably start to think about shorts, just because it does seem like anytime too much euphoria is the reverse happens. What do you think, CJ?
I'm sorry. Go ahead.
I mean, it's gone straight up for the past 4 months, and it's like, is today going to be the most bullish day? Like, it's clearly a catalyst and a news event. Like,
Well, it's turned
anyways,
negative, I believe.
it's a conflation of fundamentals and actual stock price and like trend. So
Yeah,
I think we're
and I do
still
agree
up
with CJ in the sense
0.2%
that,
on the day, but oh, go ahead. Sorry, Monty.
like, in the long term, like, none of this matters. Like, when the Qs do eventually crash, like, Apple will fall hard. But the companies that, today have become relatively obsolete, companies like Zoom, companies like DocuSign, that have been made obsolete by Apple's technology. I mean, I feel like that warrants Apple's the largest company in the world. Talking about them for 45 minutes, I don't think necessarily means that they've topped. It's just means that they have a significant impact on the market, which they most certainly do. So I do think that, we will see Apple fall with the Qs when that does occur. When, I'm not too sure. I think, again, we could see people get overzealous and try and short this market again, and then the puts get squeezed out and the market rides back up. But from a purely like technical and fundamental perspective, even though everything we said today has been somewhat bullish, I still think shorting Apple here, on a buy the rumors, sell the news thesis is probably the right play, because it has, like CJ said, gone straight up for the last 4 months without much basis. Now they unveil a new product. I expect it to cool off. And then we'll see what happens when that new product does, finally hit the shelves. We'll see.
Alex, I saw something interesting on the chart that I wanted to quickly share in relation to this. Oh, I'm on the wrong screen. So I'm going to pull up LVMH's chart, which I think is just interesting when we're talking about the general context of price action. So of course, different industry, so it's not going to run in exactly the same methodology, but if we're talking about running highs and the reaction from the market, so LVMH is very similar to Apple when we just look at the basic chart. So jumped up, little rejection, you rejected again, and then breaks the all-time high, right? And then it's now stalling a little bit, and you're going to see, this is where people are going to battle for at least, running these lows right here or lower, or obviously moving up higher. So if I pull it back to LVMH, we're going to see that when it ran high, it definitely, shorters came in, they barely won with a couple of wicks down here, and then it jumped up again. So I think, if too many people do short Apple right here and it doesn't meaningfully move lower, or it does get down to the first target and you see a sharp reaction, I think, then again, on the other side, you could talk about a giant short squeeze right here. If everybody's and their brother shorting in this little window, we get a spike up, ruin all the shorts, and then we're right back down to the same price heading into the later end of the year. Because, although we are talking about, this back and forth of euphoria, you should short euphoria and sell the news. Well, if that doesn't work, you do have to accept that there could be a bunch of stale shorts sitting there and we get squeezed again. And I feel like that's a bit similar with what happened with LVMH, with everybody kind of predicting, recession, and, people aren't going to keep spending. Well, they did keep spending. And now we've got a bunch of reports out of, that kind of feelings changing. But of course, the immediate reaction doesn't mean it's going to be the correct reaction either. So just something to consider there.
Well, I just want to do a little bit of a recap of what's going on today, real quick. One, back to the CZ news and what's going on over there. Adam Cochran, whose link I posted in the chat up there, who did the TLDR on the 136-page filing, literally is going through and explaining, saying the SEC explicitly claims that CZ used user funds, transferred them to a trading entity he owned, and traded them with third parties. If true, that's SBF level BS. Also, Cryptos R Us just put in, extrapolated what we'd mentioned before, which is the SEC pretty much stating that Cardano, Solana, Polygon, Cosmos, Filecoin, Algorand, Sandbox, and Decentraland are securities. I want to go over to the markets real quick. This one, Monty, I mean, the short that keeps on giving, it's the uni. And this thing just won't stop going down. Taking a look on Didex at the markets real quick, Bitcoin down 6.28% right now. It was just below 5 when we started the show. You got sushi down 11.55%, 1 inch down 12.4%, curve down 10%. The markets are literally just falling off right now ever since the Binance news got posted. So something to keep an eye on. Doesn't mean bad stuff. You make money on the down cycle too. So
yeah, you mind if I toss a question in Nick real quick? Nick, one thing you mentioned earlier at the start of the show, looking at some of the assets that have been resilient, it's important during stress tests like today to see which assets are being resilient. And one thing that's worth noting is ETH is, outperforming Bitcoin today. It's not down as much. And, looking at the ETH BTC chart, it's continuing to rise. Any thoughts on that, or, why that may be, or if we do, or if you expect that outperformance from ETH to continue if we keep slumping? Because, typically we'd expect to see ETH down more than Bitcoin on a day like today, but that's not what we're seeing.
Yeah, I'm actually, it's a really good question, and I'm trying to piece together why ETH, would fare better than Bitcoin, just because I think ETH, if someone was to argue in court that ETH is a security versus Bitcoin, I think Bitcoin has the better argument. I still believe that both of them are completely separate entities away from, what we typically deem a security. But I would immediately make, probably bet you $100 on a day like today, Bitcoin would probably be performing a little bit better than ETH. So I would have lost that money for sure. And if I'm trying to wrap my head around what is going on, I would have to say it's more than likely due to the ETH 2.0 narrative. So nobody's staking Bitcoin, right? You're not earning a return staking Bitcoin from operating the network. You can mine, but that's a separate kind of situation, and it requires a very large amount of money and hardware to kick that off. So with ETH, all you need is, I believe, anywhere from 8 to 32 ETH, maybe even less, to start staking, contributing to the network, and empowering it. And of course, Bitcoin is also not deflationary. It does have a hard supply cap, and it's not obviously decreasing in terms of the number of tokens available, and demand is quite obvious as with ETH. So when we talk about just market, if we talk about the operations of how we would expect a coin or an asset to move, well, the deflationary asset that runs the infrastructure that we typically operate all of the applications for crypto on probably would, sounds like a better bet or investment than Bitcoin does, at least, as it stands right now. So if I was to make that guess, it would likely be rooted in that deflationary perspective, as well as the fact that it obviously is used as the fuel for the engine of, this decentralized finance structure. So Alex, if you want to pull up my chart, actually, I think I can just click a button really quick here. One thing I do want to point out here is that we are at the local high from April. So, just because it is moving higher, this is the resistance level where you would start to expect shorts to come into play. And if we obviously flip this level, then the next area I would expect is at minimum this kind of 0.72 area, and potentially all the way up to this 0.735 level. So this is a bit unusual. I will say I would not have, like I said, I wouldn't have put money on this, but this is exactly where you would expect a reversal in price action to occur. And Monty, one of your favorite things to look out for as well, decreasing volume on a rise, which is typically not the best sign in the world either. So something to keep a lookout for if you are thinking that Ethereum is going to continue to outperform Bitcoin.
Thank you. Yeah, I agree completely, and I think watching that ETH BTC chart is going to be really important, because you don't often see those sort of divergences in price and volume And when you do, typically you get a strong move in one direction. And I think we will get that eventually in ETH. But as for the reason why it's outperforming, I completely agree that one, the deflationary element, I think it's still hanging in there. And it's not like it's, totally outperforming, it's like it's green on the day or anything. It's just down a little bit less. So that makes sense to me from like a supply demand perspective, that it's simply outperforming because of that narrative. And
Yeah, it's a tough one to nail down. It's made up of a lot more than just that. But I think the simple answer, if you were to make an inference, would definitely be that. So,
all right, guys. Well, it's going to be an interesting week ahead. This is only Monday. So
my one recommendation would be to don't just jump into shorts after we had a 5 to 10% move across assets either. Do not do that. I mean, most of the price action for the US session has come and gone. In my opinion, we have the daily close coming in about 5 hours. And at that point, Asia will also wake up and really digest this news as well. And obviously, Asia has been a little bit more friendly to crypto, and they see the market in a little bit more bullish of a light than we do, considering, the situation is opening up a little bit more for Asia in terms of innovation and ability to work with crypto.
Do you think we're going to get a lift from Asia?
I don't think we're going to get a lift, but I wouldn't just sell into a 10% drop, or stack shorts into a 10% drop, because at bare minimum, we could get some sort of mean reversion short squeeze. And if you're 10x short, you get blown out and then you're pissed off and lose all your shorting money for the next round. So, never, in my opinion, short after a 5 to 10% drop, or long after a 5 to 10% rise either. It's always better to wait, because if you go look at the daily chart, even the most volatile days are followed by a day of indecision, or potentially a trick to get you to stack, a move in the previous direction. So, it's all, even if you may miss a couple of percentage points on the next drop, I would rather that than get caught up in a short squeeze, lose all my capital, and then I have nothing to play with on the next move, So that's my suggestion.
Well, as we go out, I want to remind everybody with the Binance news that, hey, listen, think about if you have any funds out there on the exchange. Please play it safe and play it accordingly. About minimizing your risk exposure. And then the last thing I will say is, damn how rich CZ is. This dude bought CoinMarketCap himself, not even through Binance. This guy must be the most undiluted founder of all time. I mean, it's honestly amazing. So, we'll see what happens, guys. Thanks for tuning in. Hang on to your handlebars. Hopefully we have some more alpha to deliver and a little more entertainment come Thursday, and we'll see you then. So thanks, folks.